Good morning and welcome to this weekend's weekly market update from Time Price Analysis. This is being recorded on Saturday, the 21st of April. Okay, so starting with the usual long-term chart of the S&P 500, this is a monthly chart, and going all the way back here to January even, 2000. And I have the peak we saw back then as a cycle degree wave 3 with an A, B, C for an expanded flat and a cycle degree wave 4 low all the way back in March 2009. So the counts that we have are working up off that 2009 low, and we are following a cycle degree wave 5. Within that, we would expect it to subdivide into 5 waves at primary degree, which is the green circled labeling on our chart. So we have waves 1 and 2 in place, and we are still within the primary degree wave 3 with higher levels still to come in the S&P 500. So if we now come down to our weekly time frame, and there is that wave 4 at cycle degree back in March 2009, 5 waves up into the 2010 high, 3 back into the 2010 low. So there's our 1 and 2 at primary degree. Green circled labeling, green Fibonacci extensions to mark out that fractal clearly on the charts. So take the length of the wave 1, project it up off the bottom of the wave 2, and we are looking up here to the 2.0 extension potentially at 3383 S&P 500. The wave 3 at primary degree then needs to subdivide itself into 5 waves at intermediate degree, and the intermediate degree labeling on our charts is the deep blue bracketed labeling. So we have waves 1, 2, and 3. The 3 was at the May 2015 peak, and it hit the 123.6 Fibonacci extension. So that is the textbook expectation that we look for. We look for the 3 of 3 to hit the 123.6, the 4 of 3 to hold ideally the 1.0 extension. These are these bottom-up fibs on the right-hand side of this weekly chart, and go no lower than the 786. So you can see that the 4 came down and held the 1.0 extension. What these do is add layers of confidence to the counts that we are tracking. So we have therefore an intermediate degree wave 4 low at the February 2016 low, which means that the move up from there is the intermediate degree wave 5 of primary degree wave 3. Again, the intermediate degree wave 5 needs to subdivide into 5 waves at minor degree, and the minor degree nomenclature is the bright blue labeling on our Elliott wave charts. So again, we've got waves 1, 2, and 3 in place at the peak we saw in late January this year, and the correction we're now seeing is the wave 4 at minor degree, which is not yet complete. So if I now come down to the daily chart, and you can go back on this daily chart to the February 2016 low, there is that intermediate degree wave 4 low. We can then count a 1, 2, 3, 4, 5 wave move up for the initial minor degree wave 1, an A, B, C back for the minor degree wave 2. And then again, to make it nice and clear as to how to follow our charts and which fractal we're trading, we then have this, this minor degree fractal. The numbering is in bright blue, and the Fibonacci extensions that relate to it are also in bright blue. So we take the length of the 1 and we project up off the bottom of the 2. Bear in mind we use logarithmic scale Fibonacci extensions. So we have a 1, 2, and the 3 up into the late January peak, which just poked its head above the 223.6 extension. So it was an extended third wave, although we are seeing that 223.6 occur again and again in both the S&P 500 cash market and the ES mini futures on multiple time frames. So from that peak, we're then in this wave 4 at minor degree. Now, wave 4s are the most complex and unpredictable of all Elliott wave structures. The two most difficult to track are wave 4s and B waves. And currently, we are within a B wave of one of the subsections of the wave 4. And that wave 4 itself is unfolding as what appears to be a WXY pattern. So WXY is simply an ABC for the W down, followed by an X wave, which can take pretty much any form it likes, but it connects, a connecting wave, and then another A, B, C down. And we are still within this B wave here in the US indices. That has made trading over the recent sessions extraordinarily tricky. So in our live room, we've done exceptionally well out of this volatile period. But this last week, the last couple of days, we've had few, if any, trades because the market has just been that precarious to predict. So my rule is, if I'm unclear about what I'm trading, I don't trade it. And that way it avoids giving money back to the market from the profits you've made. And over time, that has a tremendously positive effect on your results. Okay, so WXY is what we're tracking. And I still think we've got a little higher to come in this B wave. So if we now come down, I'm going to come straight down to the hourly chart. Off the top of the X wave, we've got a 1, 2, 3, 4, 5 down for the A wave. Each subwave, the 1, 3, and 5 are all in 3. So this is a diagonal move to the downside, and it fibs out to perfection down to this low seen in early April. From there, we've got an A, B, C for an A wave up of the B back down to the low seen on the 6th of April, and then another diagonal. So we've got an A, B, C for the 1, 2, A, B, C for the 3 into the highs seen at the beginning of this week, and now an A, B, C. And I think at Friday's low, we got a spike and reverse very, very late on Friday afternoon. And I think that is the wave 4 of this diagonal B for the final C of B completed. And we took a long position, both using the 2 times leveraged ETF. So we went long using SSO late Friday afternoon and pretty much caught the bottom within 1 ES point. I also took a futures position, which I've held over the weekend in the ES mini futures with I got an entry of 26.61, and I think the low was 26.60 on Friday afternoon. So within a point. And then the market rallied into the close as we suggested that it might. So that gave us an 11-point cushion on that trade going into the weekend. So what am I looking for this coming week? We're looking for the market to push up to 27.39 to 27.47 in the S&P 500 cash to complete this 5th wave of a C of this B wave. So I'm looking, therefore, we've got the A, B, and the final 5th of this C up before a move down to complete the rest of our minor degree wave 4 down to our target area of the 2480, possibly down as low as 2424 in the S&P 500. I'm pretty comfortable with the 2480 level containing this, I suspect. But again, once we've got the first 1, 2 to the downside in, we can run some top-down fibs on the rest of this C wave, which hopefully it can unfold as a diagonal, which will make it trickier. But I'm looking for this to unfold as an impulse, ideally, and give us a nice big swoon to the downside to complete this move. So looking up initially this week, it's possible that This 4's not quite in, and it wants to drop one last time to the 2658 area, but I think I'd be surprised if we need to do that. We'll just have to watch out for that as the futures open on Sunday evening. So positioned long for this 5th up, and then we'll reposition short for the rest of the wave 4 down. Now, I just want to cover off one point here. This is my Hurst timing chart, and it's a daily chart of the S&P 500. And here's my timing window for the wave 4 low, with an ideal timing of the very, very end of this month to the early part of May. This green line here, so a number of people have been mentioning the idea of a triangle count for the 4, where we have an A, B, C, this move up is the D, and then we get an E, then we take off. That's all very well, but trying to predict where the top of the D wave, which is what this move up here would then be in a triangle, is, in my opinion, a fool's game, and totally and utterly unnecessary from a trader's perspective. What I've done on this chart is simply drawn the trend line across the spike lows, the last 2 spike lows we've seen on the S&P 500. If we are in a triangle, the next move down should not penetrate this line. So that is what I will watch. And if we see a completed structure to somewhere approaching this line, then we take out this peak. That would get me long on the basis that the 4 has completed as a triangle. The other variable with triangles is this next move down would be the E wave. And again, E waves often truncate, come up short. There is no reliable way of predicting where they're going to be. So I'm not going to attempt to do so. I'm simply going to use 2 parameters, which are this trend line drawn across here, or support line more correctly stated, and the peak that we see hopefully in the coming week for the top of the B wave. So if I see the market make a bottom at or above this trend line, then take out the next peak, then I will give the triangle count the benefit of the doubt and go long. Okay, coming over and looking at the NASDAQ next, and this again is the long-term weekly chart working up off the November 2008 low when the NASDAQ bottomed. The NASDAQ's a newer index, so we have less price history on that. So I can sync this up and call it a 4, you can call it a 2, you can call it a B. It doesn't, from a trader's point of view, particularly matter at this juncture. We are seeing a 5-wave impulse move to the upside unfolding quite clearly off that low. So counting up from that low at primary degree into the 2010 high, we have 5 waves up for the primary degree wave 1, the 2 back into the summer of 2010 for the 2. Again, green circled labeling for the nomenclature for the primary degree wave, green Fibonacci extensions, logarithmic scale, take the 1, project up off the bottom of the 2. And we expect this primary 3, which we are still in the NASDAQ, we still have higher to come into later this year to early next year in all of the US indices. We need to see that then subdivide into 5 waves at intermediate degree. So as with all charts, and just described to you in the S&P 500, the intermediate degree nomenclature is labeled in dark blue bracketed labeling. So there's the 1, there's the 2, here's the 3 into the 138.2 extension in the NASDAQ into the June 2015 high. The 4 then was a running flat for an A, B, C, D, E, which made it difficult. And again, that is only something realistically that you can see with the benefit of 2020 hindsight. But up off the June 2016 low, we are now seeing 5 waves at minor degree unfold to complete the intermediate 5 and therefore all of the primary 3, with a target in the NASDAQ of 8,200 and possibly slightly higher to complete that move. At the moment, we are still within this wave 4, minor degree wave 4 correction in the NASDAQ. So if I now come down to our daily chart, There's the top of the 3 into the 261.8 extension for a fairly standard extension actually for a third wave. And again, this same W, X, Y pattern unfolding in the NASDAQ, with the anomaly that the X wave made a slightly higher high than the top of the 3. Now that's well within the tolerances. There are no rules for those tolerances, but as described in previous videos, I have some guidelines that I personally use for it, and it came nowhere near breaching those. So I'm tracking this as a WXY, but being cognizant of the fact that, again, twice in the last couple of years, we've had a running flat in the wave 4 position in the NASDAQ. So we could possibly get an A, B, C, D, E, and up. Same criteria as the S&P 500 in terms of either a triangle, I'll use the support line, and the top of the next move. So I'm expecting this B wave to come higher this week as it just outlined in the S&P 500, same in the NASDAQ. Then we get the next drop. So the next drop will give us the key. The ideal target for it is just on 6,000 NDX and then up. If I see it come short of that, then take this high out. I will give the running flat the benefit of the doubt and go long the NASDAQ. I'm not specifically going to go long the NASDAQ itself, but I'm looking for positions in the XLK technology ETF and certain technology stocks. So just coming down to the hourly time frame on the NASDAQ and off the X wave, again, we've got that leading diagonal to the downside for the A wave, all in 3s, and again, it fibbed out perfectly to the low. Then an A, B, 1, 2, 3, A, B, C for the 4, and I think that 4 also in the NASDAQ completed at the spike and reversal low late on Friday afternoon this week, looking for this 5th up to 69.72 in the NDX. If I just come down and look at this now on the 15-minute time frame, up off the bottom of the A, B, C for the initial A wave up, B wave back, then an A, B, C for the 1, A, B, C for the 2, A, B, 5 waves for the C of 3, and that came up to the 1.0 extension. So in a diagonal, waves 1, 3, and 5 are all in ABCs, 3-wave structures, and we look ideally for the wave 3 to hit either the 1.0 or 123.6 extension. So that's these multicolored fibs here, the length of the 1 projected up off the 2. There's the 3 into the 1.0, A, B, C. Now these red retrace fibs here are the length of the wave 3 as measured up off the bottom of the wave 2. And you can see we hit the 764 retrace for a deep retrace, clear ABC structure, and overlap with the wave 1 here. So at the moment, that's a textbook diagonal and a textbook wave 4 for it. So I'm now looking for this low from Friday afternoon at 66.40 to hold in the NASDAQ, and it to push on up to 69.29, 69.72, 69.91, and possibly even 7030. So those targets are derived from the 138.2 extension for the diagonal, the 764 back, that's the retrace fibs of the A wave down, and the 1618 of the diagonal, and then the 1764. So the 5th of the diagonal we would expect to target between the 138.2 and the 1764. And then we also need to look for confluence with the retrace fibs. So 69.72 to 69.91 is the high probability target based on the Fibonacci levels from multiple different points of calculation in the NDX this week. Coming over and looking at the Dow Jones Industrial, and if I just flip back quickly to the monthly chart, again, the January 2000 high I have as a cycle degree wave 3 high, an A, B, C for an expanded flat for the cycle degree wave 4 into the February 2009 low. Then we're counting the subwaves at primary degree, the green circled labels of the cycle degree wave 5. And at the moment, off that 2009 low, we have waves 1 and 2 in place, and we are still within the final fifth wave of the primary degree wave 3 in the NDX, sorry, in the Dow Jones Industrial. Looking at our weekly chart and going back to March 2009, there is that cycle degree wave 4 low. 5 waves up into the April 2010 high for the primary degree 1. The 2 back here, again, green Fibonacci extensions, logarithmic scale, green circled labouring for the primary degree fractal. 1, 2, and we're looking for the 3 to come up here to 29,137. So just shy of 30,000 in the Dow Jones Industrial. The 3 itself needs to subdivide into 5 waves at intermediate degree. So there's the intermediate 1, 2, and 3 into the May 2015 high. Again, 123.6 extension. A, B, C back for the intermediate 4 into the February 2016 low. From there, waves 1, 2, and 3 at minor degree are in place, which puts us still in the minor degree wave 4, and that is the correction again that we're seeing in the Dow Jones Industrial at the moment. Coming over and looking at it on the daily time frame, there's the top of the minor degree wave 3. We've got an A, B, and then what looks to be just a straightforward ending diagonal down for the C of 4. So I've got a 1, 2, 3, and the move back up we're seeing at the moment in the Dow Jones Industrial is the 4. That needs to stay below 25,449 in the Dow, and then I expect us to drop down here to 22,633, which is the 1.0 extension. That's the length of the A wave measured off the top of the B wave. That is also where we have the 1764 extension for the ideal target for the 5th of this ending diagonal. If I now just come down and look at this in a hourly time frame, there's the B wave, ABC1, ABC2, ABC3, and you can see that that 3 hit the 138.2 extension for the diagonal. So it's the length of the 1 of the diagonal measured then down off the top of the 2. So again, pretty textbook stuff. And off that, the structure in the Dow Jones mirrors that in the NASDAQ and the S&P 500. We have an A, B, C for an A wave, a B wave back down, then an ABC 1, 2, ABC 3 into the 138.2 extension, A, B, C back, and then we spiked and reversed through the 618 retrace of this wave 3 measured up off the bottom of the related wave 2 in the diagonal. And I'm looking now for this move up here. The 1618 extension for the diagonal is at 24,999 in the Dow Jones Industrial. The 764 retrace fib, that's for the length of the 3 as measured off the top of the 2, is at 24,977. So that's a high confluence of fibs there. The 1.0 extension for taking the length of this A wave measured up off the B, and that's again the standard expectation for the C wave to come to 25,037. So that's the target I'm looking for in the coming week in the Dow Jones Industrial, is a move up to around the 24,997 to 25,037 level, and then for the Dow to drop down to the target. And if I just bring this 4-hour chart across, so there's the top of the 4 I'm expecting this week, coming week or so. Then down here, 22,705 to 22,769 for the completion of this C wave of 4 in the Dow Jones Industrial Average. Okay, so let's come over and look at the small caps, the Russell, and coming up off again the March 2009 low, which I have also in the Russell as a cycle degree wave 4 low. 5 waves up here into April 2010 for the primary degree wave 1. So that's the circle green labeling again. There's the 2 there. Run the fibs. So length of the 1. Whoops. Let me just tidy those up. They seem to have jumped. There we go. The length of the 1 measured up off the bottom of the 2. We then look for the wave 3 at primary degree to subdivide into 5 intermediate waves. So there's the wave 1, 2, and there's the wave 3 at intermediate degree in the Russell into the June 2015 high. Now in this case, it hit the 1.0 extension. So it didn't quite get as high as the ideal, which is the 123.6. The 1.0 is the minimum expectation for the wave 3 of 3. So it met the criteria and it hit it pretty much on the nose. What we're then looking for is some lower level fibs in terms of these bottom up fibs to hold the wave 4 retrace. So we'd look at the 786 and the 618. And in the case of the Russell, we got a clear A, B, C structure that came down and hit that 618 bottom up extension on the nose. Next criteria is that we need to ensure that this wave 4 does not enter the territory of its related wave 1. Well, its related wave 1 is the one at the same fractal, which is the intermediate fractal. So the blue bracketed labeling. There's the 1, there's the bottom of the 4. Criteria are all perfectly met. So off this low back in February 2016, we're now tracking the intermediate degree wave 5 up to complete the primary degree wave 3. Target zone, so the normal expectation is the 1618. However, with the 3 of 3 having only hit the 1.0, it is probable that we will come up to only the 138.2 unless we get an extended fifth. So the target is between the 138.2 and the 1618, which is Russell 1722 to 2069. At the moment, within this intermediate 5, which in and of itself then needs to subdivide into 5 waves at the next Elliott fractal down, which is minor degree, bright blue labeling, minor degree Elliott wave fractal. We have a 1, 2, and 3 in place, and we are still within the minor degree wave 4 correction. Once we've seen that complete, we then expect the 5 to come up to complete all of the primary degree wave 3 into our target zone later this year. So if I now come down and look at this in the daily chart initially, there's the top of the minor degree wave 3 at the Jan 25th high. Impulsive structure down, which counts as 5 waves for the A, deep B wave back, which puts us in this C of 4 down in the Russell. For our chart, zooming in on this, so off the top of the 3, 1, 2, 3, 4, 5. So a 5 wave structure to complete the A wave down into the early February low. A clear A, B, C back for the B wave. Then I have the diagonal down in the Russell for the wave 1. A, B, C back right into the 886 fib at this week's high in the Russell for what I'm counting as a wave 2. And looking for this to unfold as an impulse down in the Russell. So I'm looking for a 3, 4, 5. So potentially looking for the Russell to lead down and to accelerate down more quickly, potentially, than the other indices. So let's just look at that now on an hourly chart. There's the structure down for the 1, A, B, C. So there's a couple of things about this peak we saw this week. Firstly, it hit the 886 retrace fib. Secondly, if I take the length of this A wave and project it up off the bottom of the B wave, it hit the 138.2, these pink fibs extension on the nose. So the two relationships, the two most common relationships we look for in a C wave are for it to either hit the 1.0 extension or the 138.2 extension of the related A wave. So it's done that. We've got a 5-wave structure to the downside here, which I'm counting as this wave 1 of the next degree down. Now, if I just now come back to the 4-hour chart, I'm looking at the Russell to give us clues. I've got this Alt 4 here, which I'm showing on all the charts potentially in the indices. And when we do need to pay attention to it, it is possible that we're getting a diagonal move up in the Russell, and we have the 4 complete here, an A, B, C for the wave 1. The wave 2 back completed here. Now, if that's the case, then what we've seen in the Russell would be a 1, 2, 3 into the 1.0, small 4 back that did overlap the 1, and a 5 up to the 138.2 for an A as a leading diagonal of the next move up. So this move down in the Russell as it unfolds is going to be key. I'm going to be watching the retrace fibs against this move up off the April the 2nd low. And if it holds a retrace fib of that, then takes out whatever this high is here, sorry, takes out this high here, then we need to start to consider the alt count in the indices. So that's going to be my warning, if you like, or the signal that there may not be a lower low to come in the US indices than the one we saw in early February this year. It's not the expectation, but again, it would be foolish not to be cognizant of the fact that it could be the case. And I think the Russell's the one structure that potentially will give us the earliest warning of that possibility. Okay, moving over and looking at the European indices, and this is the long-term weekly chart of the UK FTSE. So in the case of the FTSE, going all the way back to January 2000, I have that peak as its cycle degree wave 3 top, with an A, B, C down into the March 2003 low. So I've got the wave 4 at cycle degree in the UK FTSE at the March 2003 low. From there, A, B, and then a 1, 2, 3, 4, 5 for the C wave for a cycle degree, sorry, a primary degree wave 1 peak into the summer of 2007. Off that, we then have an A, B, and 5 waves for the C down for a deep wave 2 at primary degree into the March 2009 low. So in the UK FTSE, and also it's the same in the German DAX, the 2009 low is a primary degree wave 2, as opposed to the cycle degree 4. Off that 2, I have 5 waves up into the 2011 high for an A wave, A, B, C back for a B, and then another 5 wave structure up into the April 2015 high for wave 3 at primary degree. Now bear in mind, all of this off the 2003 low I'm counting as a diagonal. So waves 1, 3, and 5 will be 3 wave structures. So A, B, C. So there's the A, B, C for the 1, A, B, C for the 2, A, B, C for the 3, which came up and hit the 1.0 extension. So again, ideal target for the wave 3 in a diagonal is the 1.0 extension. That's the length of this wave 1 as measured up using logarithmic scale Fibonacci projections off the bottom of the wave 2. There's the wave 3 into the 1.0. Off there, an A, B, C back for the primary 4 into the February 2016 low, which considerably overlapped the wave 1 of related fractal degree. Therefore, that rules out any idea of an impulse structure on a weekly or long-term time frame in the UK FTSE. Now, working up from that February 2016 low, we need to see another A, B, C structure to complete the primary degree wave 5, which will then complete a cycle degree wave 5 in the FTSE. Now, it's some years off, and I think we're still within this A wave, so I'm expecting higher in the UK FTSE into the end of this year, stroke early next year, to complete this A wave before we see the deeper wave B pullback. Now, coming over and looking at this then on the daily time frame, counting up off the primary degree wave 4 low back in February 2016, I've got 5 up to here into April 2016 for the minor degree wave 1, an A, B, C back for the 2, then 5 waves up to here into the summer of last year, June 2017, for the minor degree wave 3, which came up and hit the 1764 extension here on the UK FTSE. Since then, we have been in, even by wave 4 standards, a very long, drawn out and complex correction. So there's the A wave for the FTSE down into the September, mid-September last year low. And that in and of itself unfolded as a WXY structure just for the A wave. Then we got a clear 3-wave move up here as an A, B, C for an expanded flat. So the B wave high came higher than the origin. And then a 5-wave impulse structure down for the C wave, which I think is now completed. Using the fib levels, if I take the length of this wave 3 as measured from the bottom of its related wave 2, there's the 38.2 retrace fib, which is exactly the level we hit for the wave 4 back at the end of March. And that target has been on this chart for 9 months since we topped out here. So we've finally come down and hit our long-term target here in the FTSE at 68.48. What I'm now tracking is this move up out of that low. And I'm looking up here for a move to at least 8025, more likely 8203 to 8391 in the UK FTSE into the end of this year now. So if I now come all the way down to an hourly time frame, there is the March the 26th low for the wave 4 at minor degree. Now, 2 possibilities coming up. This move up to me looks like an A, B, C. I can force the idea of a 1, 2, 3, 4, 5, but the 5 and the 1 are disproportionate. But running with this idea of an ABC for a 1 in a diagonal, 2 back, 3, we're up at the 1618, which is unusually high in a diagonal for the 3. That notwithstanding, if it is the 3, we'll be looking for a 4 to hold one of these retrace fibs, and more likely the 764 at 7063 to give us the overlap with the 1, and then push up again here to 74.73. That would complete a 5-wave move up in the UK FTSE as a leading diagonal. And if we see that and a 3-wave move back that then holds a retrace of all of this, that would be the swing long entry in the FTSE. If I come down now to the 15-minute time frame, I've counted and fibbed this slightly differently to show the potential alternative count, where this is the 1, 2, and then this here is the 1 of 3. The thing against that idea is the fact it came up just over the 1.0 extension. There's nothing in the rules that says it can't. It's just unusual. We look ideally for around the 618 extension for the wave 1 of the next leg up. So we take the length of this one, project off the 2, and we look for the 618. Well, we came all the way up to the 1.0. Beyond that, this structure is picture perfect. We've got a 1, 2, 1, 2, 3 into the 1618, 4 that held the 123.6, 5 of 3 into the 2.0 extension for an extended third, 4 back down again that held the 138.2, and a 5-wave impulse that looks to me like it wants just one last push up here to 73.93. So if we see a last push up this week in the FTSE, then I'm going to be looking at these retrace fibs down to 7063 to 6987. And for one of those to hold and turn the FTSE back up. In either of these 2 scenarios, I'm looking for the swing long position from that setup in the UK FTSE. Okay, coming over and looking at the German DAX, and again, long-term weekly chart, and going all the way back to March 2000, I have the peak seen there as the cycle degree wave 3, so very similar to the UK FTSE. ABC down into the low seen here in February 2003 for the cycle degree wave 4 low. Then an A, B, C for the primary degree wave 1 up into July 2007. ABC back for the related primary degree wave 2, which didn't come anywhere near as deep in the German DAX as we saw in the UK FTSE. So then counting up off that 2009 low, I have an A, B, and I think we're in the final move up now of this C wave of the 3. And I'm looking for that to come up and hit this 138.2 extension here, these dark blue fibs. So here we go. A, B, take the length of the A, project up off the B. The 138.2 in the German DAX is at 14,007. So I'm looking up in the German DAX to at least there into later this year. So counting up off the bottom of the B wave, I'm looking for a 5-wave C wave at minor degree. And I have a 1, 2, 3 into the 123.6, 4, and then when working off this February 2016 low for our trading counts and looking for a 5-wave structure to complete. So if I now come down to the daily time frame, there's the wave 4, which is at minor degree in the DAX in February 2016. And then at minute degree, the orange circled labeling, wave 1, 2, run the fibs again, 3 came up and hit the 2.0 extension right on the nose here, the orange fibs here. A, B, C back, and again, look, right into the 38.2 retrace fib. That's the length of the 3 as measured off the bottom of the 2. So that was been our long-term target on the German DAX for this completion of this wave 4, which I do think is complete as well in the German DAX, and that we're in the 1 of this 5 up. So a minuet degree wave 1 of minute degree wave 5. And here's the target range. So we had the 14,000 and change level from the weekly chart. Looking at this daily chart, we can see we've got a range here of 14,214 to 14,339. With a possibility we push all the way up here to 14,982. So again, once we've got the 1 and 2 in place, we can run another set of Fibonacci projections up to start to tighten the target zone for the completion of this move later this year. Now just coming down and zooming into the 4-hour time frame, there's the structure of this move down. So we've got an A, B, 1, 2, 3, 4, 5 in the German DAX. There's that hit on the 38.2 retrace fib. Hourly chart, it's tracking the move up off this low back on the 26th of March. So I have a 1, 2, 3, 4, 5 for an initial leading diagonal up for the wave 1, 2 back. Again, run the Fibonacci projection. So these multicolored fibs here. So I've got a 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5. I was looking for this push this week and still am up to 12,662 to complete the wave 3 before we get a wave 4 pullback and then the 5th up. So if you refer to the hourly chart on the site, this is what I'm following in the German DAX, looking for the completion of the 3. We then do need a 4, 5 to give us a full 5-wave structure up off the March 26th low. Then the 2 back to around the 618 to 764 retrace and off to the races in the German DAX. So that's the setup I'm looking for to go swing long in the German DAX. Okay, coming across and looking at commodities. So this is the long-term weekly chart of oil, CL. And going all the way back to July of 2008, the peak we saw then, I have as a super cycle degree, wave 3 high in CL. Clear 5-wave impulsive structure down into the February 2009 low, and I have that as the cycle degree A wave. So if we look at this, we got an A, B, C at cycle degree to complete a super cycle degree wave 4 low into February of 2016. Now, working the counts up off this low, and the nature of this whole move is less than clear, is the first thing to say. The way I've been counting it for some time now is I've got up into this peak here in March 2016, I have an ABC structure for a wave 1, a wave 2 back here. So I'm counting all of this move up for an initial wave 1 at primary degree as a diagonal. So the ABC for this 3, there's the A, then just to make it even more complex, an A, B, C as an expanded flat for the B. And we're now in this 5-wave impulsive structure to the upside for the wave 3, or rather wave C of 3, which I think may have just completed this week at this 138.2 extension. So I'm now looking for this wave 4 pullback in CL to, if the range is from 41 to 49, with the possibility we only come as low as 54. But ideally, I think we come down to around the $45 level in CL before the next move up into the high 70s, which would then complete the initial wave 1 up off this supercycle degree wave 4 low back in February 2016. So that's what I've been tracking in USO, or sorry, CL. There's the detail brought down onto the daily chart, but just working up off this B, we've got a 1, 2, 3, 4, and then you can see a 1, 2, 3, 4, 5 for a final ending diagonal right into that 138.2 fib on the daily chart. Then coming down to the 4-hour time frame, there's that final diagonal up 1, 2, 3, 4, 5. And you can see we started to come down reasonably sharply late this week. 60-minute chart, there's the hit on the high, and here's the beginning of the move down. So what we're now looking for in CL is for the first 5-wave move down, which we may now have seen. I've got a 1, 2, 3, 4, 5. So we're looking now on the shorter time frames for a retrace that holds below this high, and then a much, much steeper move down in the wave 3. And all of this would be the one of the initial one of C. So looking down in USO, if you also look at the Hurst cycle indicator charts on the site, I've got weekly, daily, 240-minute, 120-minute. I've got sell signals right across the board. The Hurst works pointing down for some weeks to come. So I'm looking for this 4 down and then a final 5th up before a much, much deeper pullback in over several years in CL. Okay, NG. And again, starting with a very long-term time frame chart, and this is the weekly chart of NG. So back into December 2005, I have a supercycle degree wave 3 high at that peak, and I still got us overall in this move down at supercycle degree, so multiple years down to complete the wave 4. Within that, at cycle degree, I've got an A wave down here into March 2012, which subdivided into a 1, 2, 3, 4, 5. So 5 waves at primary degree for a diagonal down for the A wave. Then an A, B, so this is, sorry, A, B, and we're now in this C wave up here of B at, so it's a C wave at primary degree of a B wave at cycle degree. Okay, so bringing that down into the shorter time frames that we can trade. If we've got an A to here, B, and that B was at the March 2016 low. 5 waves up here into the peak seen in December 2016 for the wave 1 of this C, and A, B, C back right into the 50% retrace fib for potentially the completion of this 2. And we're now looking up in NG. Now, it is possible the 2's not in, and we need to drop down 1 more fib in the 2. So we do need to keep that in the back of our minds in our early trading. We've been remarkably consistent in terms of success trading natural gas using both DGAS and UGAS, which are the short and long 3 times leveraged ETFs. So if we now come over and look at this on the daily time frame, there's the one, A, B, C, and that's the B wave, then the C down, okay? The question is, within this C down, have we got a completed 5-wave move into the 50% retrace, or have we got a 1, 2, 3, and all of this is a 4, and then we drop down 1 more time to the 2260, the 618. At the moment, I'm giving the bullish count of this low the benefit of the doubt. So that's a very, very messy move up, but I think it's an ABC for a wave 1 in a larger diagonal move up off the low. If I come down now to my 240-minute time frame, this is what I'm tracking and want to see to the upside. So if that's the 1, the 2 back came just shy of the 764 retrace. So I'm now looking for the 3 in a diagonal move up to 2900. And I think what we've got is an A, B, and then 1, 2, and we're getting a diagonal move up inside a diagonal, would you believe, here. And if I just come and look at this now on my 60-minute time frame, so there's the initial 1, 2, 5-wave diagonal up for the next one, A, B, C back, and you saw this Thursday and Friday double bottom here into the 764 retrace. And if you go back and look at the pre-market review video that I did yesterday morning, I was looking for this to hold and come up through this FLD. Well, we've done that. We've broken through the FLD, which is a 5-day FLD. So I think this low here that we were looking for is now in, and we are in this move up here to 2900 in natural gas. We took out the 618 retrace. That's the retrace of this move down here. Next levels above us, 2761, 2775, 2790. I want to see those taken out probably after a pullback. I think we've got a 1, 2, 3, 4. We get a 5th up, pull back, then take these out early in the coming week. So step by step with natural gas and in and out of the ETFs, but paying very close attention to the support and resistance levels as we go along. I haven't re-entered this. We traded most of this up in UGAS, came out, and I've not taken a new position as yet. I want to see this complete 5 waves and pull back and hold a fib. That will then get me into UGAS again to trade some of this move up in natural gas. Okay, everyone's favorite, precious metals and miners. I'm going to do this reasonably briefly because I did a very long detailed video on Monday on this entire sector and went through all the Hurst work, all the charts in the precious, in our gold miners portfolio. That video is on the site if any of you want to go and refer to that. And substantively, nothing has changed in the analysis since that update. However, GC, just quickly on the weekly chart. So September 2011 is the cycle degree wave 3 high. The low here, I've got as a cycle degree wave 4 low in November 2015. Then a clear impulse up for probably a 1, can be an A. From a trader's point of view, it doesn't matter at this point. ABC back for the primary degree wave 2. 5-wave diagonal up here into September 2017 for the next 1. ABC back for the 2 into the 50% retrace fib. So what we have of the 4 is a 1, 2, 1, 2. If I come now to the daily chart, there's the primary 2, there's the 5-wave diagonal up into September 2017 for the intermediate 1, ABC back into the 50% retrace here at 1237 for this 2. Off there, we had a 5-wave move up into late January this year for the next 1 up, an ABC back for the 2, which held just above the 50% retrace fib. Then we have a diagonal move up, and that diagonal does fib out to perfection in actual fact, into the highs we saw the other day. And since then, we got the immediate sharp drop that we look for at the end of a diagonal. So I'm tracking a 1, A, B, C, 2 back, looking for a move down to complete early this coming week to the 1318 to 1328 level in GC. If you see one of those fibs hit and hold, that will get me long GC, and I will add to that position on a breakout of 1370, this high here, looking for an immediate move up to 1470 for the 3 of 3, and ultimately to 1526 for this 3 here. Okay, and in the metals, that's likely to be a vertical climb and fairly quick as a move if this is what's going to play out. Just coming down to the 4-hour chart, there's that last 2, then the 1, 2, 3, 4, 5 as the diagonal. These multicolored fibs are the ones for the diagonal. So there's the 1, project up off the 2, 3 into the 123.6, 4 with the overlap, 5 right into the 1618. A wave down into the 50% retrace, B back, and we're coming down here now. So looking this week for this to drop down here to 1328 to 1318 and then take off. And then just for those of you who like to follow it on the shorter timescales, here's the hourly chart. This is what we're looking for, this move down here to hit and hold. There's the Hurst ideal timing of April the 24th, which is Tuesday. So we're looking around Tuesday, Wednesday time for this to drop down here and then take off in GC. So silver, very quickly in terms of longer time frame, I've got the peak in 2011 as actually a cycle degree wave 1 in silver, with the lows then into December 2015 as the cycle degree 2, which came down to the 50% retrace level. Off there, I have a 5 waves move up for the next 1 up. That's a 5 wave diagonal move, 2 back into the summer last year. Now, just daily chart, there's that 5 waves up as a leading diagonal, ABC for the 2 back, jumping then down the time frames again to my 4-hour chart. There's that 2 back. What's interesting about that too, intraday, large spike and reversal on huge volume. And if you come over to the extreme right-hand side of this chart, this fib here, 886 retrace, is what we hit. That's the retrace fibs of all of the wave 1 up. And the 2 intermediate degree came right down intraday, huge spike and reversal. It's a classic signature wave 2 spike and reversal in silver. 5 up here into September 2017, A, B, C back for this 2. Now, off the 2, which was December last year, 5 waves up here into January, late January this year, and then A, B, C back, potentially for this 2 complete. I'm leaving this Alt 2 on the chart. It is possible we have an A, B, C for WXY for this 2. I think it's less likely now, because if I come down and look at this on the hourly time frame off this 2 here, so just flipping back, that's the 2 here in March this year. I can count an A, B, C for a 1, A, B, C for a 2, 3 into the, just move this over so you can see the fibs, right into the 1.0 extension, 4 back that overlap the 1, clear A, B, C up, right into the 1618 extension this week, and we started to come down. These are the Hurst FLDs. We've crossed the 5-day, looking for the 10-day to be crossed and the 20-day to hold. And for a 20-day cycle trough, so this is very short-term stuff even for Hurst, into this 1657. So I'm looking for a move down into the middle of this week to 1657 in silver. I want to see that hold. Certainly don't want to see it below 1638, and then silver to take off to the upside and take out this 1770 level. Okay, so again, if we come down to 1657, it hits and holds, that would get me the initial long position in silver, and I would add to it on a break of 1736. Okay. GDX. So again, long-term weekly chart, and the lows we saw back in January 2016, I have as a cycle degree wave 2 low in the GDX. Very clear impulsive 5-wave structure up into the summer of 2016. So that is probably the wave 1 of the next degree up. It can be an A, and we're just going to come up here to the sort of 56, mid-50s region for a C wave in a corrective. But from a trader's point of view, at this stage of the pattern, that does not actually concern us. So if this is the 1, this is possibly the 2 here. I'm not keen on that idea in the GDX. It didn't hit a fib. It looks like a 5-wave A wave to me. The difficulty is this sideways move we've seen ever since. And there is no way to put a reliable count on that. I know lots of people try and they count it as series of 1 to all sorts of this. The honest truth is that you just can't. So best efforts only. I think what we've got is an A up, WXY for a B down, which I think needs a little lower ideally. It's possible it completed here. And we're going straight up to the mid 28, 29 region for this B wave before we then drop back down to the 1778 level to complete the 2 in the GDX. So this is what I'm monitoring. You know, if we take out this high at 31.85, then absolutely this was the 2 over here. And we'll end up working out the correct count for this with the benefit of hindsight only, I'm afraid. But coming down to the daily time frame, A, W, X, A, B, A, B, C. So I'm looking for a sharper drop potentially in the GDX this week than in the metals, with an ideal target of between 20.07 and 20.12. However, these retrace fibs here, if the B wave is in here where I've got this purple A, then we're going to hold 2182 to 2143 and take off. So that's what I'm going to be on the lookout for in the GDX this coming week, is if we hold one of these retrace fibs, then that would tempt me probably into a fairly small position in this, because I'd rather take the position in futures in the metals themselves that have got a cleaner setup, and then add to the GDX as we go along. I'm also, as you know, tracking the miners in the miners portfolio, and that's all in the video in terms of looking for positions in those. But I would, if we took out 2331 after hitting one of these retrace fibs, then need to accept that the B is in and go long the GDX to up, looking for a move up to at least 28. And if we take out 29.92, so call it 30, then it is likely that this alt 2 is actually the 2, and we have a 1, 2, and we're in the third up in the miners. So very, very difficult price structure and pattern to have any degree of certainty about. The setups are much cleaner in silver and GC. So sort of keying off those and cautiously bullish now the entire sector. Okay, and finally, a look at the currencies. So this is the long-term weekly chart of the US dollar, the DXY. And I have a cycle degree wave 3 low back in March of 2008. From there, A, B, and I think we're in the C of the cycle degree 4. And within that, I think we have waves 1, 2, and 3 complete, with the 3 completing at the January 2017 high. From there, we've got this 5-wave impulse structure to the downside, which I believe is the A wave of this 4 as a flat. And we're going to get a very, very high B wave up to over 100 in the DXY index before we drop back down again in the C of 4. Now, the alt count on this chart is, in my opinion, of equal likelihood to the main count, where this is the 3, and this is an A, B, C, and we have completed all of this 4, and we're going to, the next move up is going to be the 5. Once we see some more price action and we get the initial structure up and we get an A, B, or a 1, 2, we should be able to get some more clues as to which of these 2 is most likely. For now, though, looking up over the next 8 or 9 months at least in the US dollar for this B wave, and coming down here on this daily time frame, the only question is this A complete, or is this move we're seeing here a final 4th, and we need to drop down one more time in the US dollar to somewhere around 86.76? And there's mounting evidence now to suggest that we're not going to see another low in the US dollar. Here's the 4-hour chart just coming down to this, and you can see I think we've got a 5-wave move up to here for an initial wave 1, an A, B, C back for a 2, and that we've got another 1, 2, and we're now about to break out in the dollar. And if we take out this trend channel and this 91 level, then I think that pretty much seals it in the US dollar. So what I've been tracking is on the hourly time frame, there was 5 waves up to here, an A, B, C back for the 2, then another 5 waves up for another 1, 2 that held the 786 retrace, and then late this week we've started to accelerate strongly up in the US dollar. So at the moment, I'm going to tidy this chart up properly as and when we break out over 91, so that we can then start to track the move up to see whether we're in a B wave and it's going to get messy, or we're actually in that 5th wave up in the US dollar. So I don't actually trade the US dollar. It's obviously the key benchmark for all the major currency pairs, and it's the one you have to be aware of when trading currencies. But if I come across now and look at the euro, so the euro dollar, and the euro makes up I think 68% by weighting of the basket of currencies that make up the DXY. So whichever direction the DXY goes in, the euro dollar is going to go in the exact opposite direction. And in the euro dollar, I've got this peak here where I start the counts. That's the all-time high after launch of the euro back in July 2008. And from there, at cycle degree, I think we're in a very large A, B, C down, and I don't think we've seen the lows yet. So working off the top of the B, I've got 5 waves down here to the January 2012 low for a wave 1 at primary degree, an A, B, C back for the primary degree wave 2 peak up into May 2014. And off that, 1, 2, 3, 4, 5 for the 3, A, B, C back for the 4. So I think the peak we've seen recently was the wave 4 of primary degree. And I'm looking for this to come down to below parity with the US dollar in the primary degree wave 5 to complete the C. So now coming down to a 4-hour count, that's the top of that 4, if that's the case. And we've got a series of 1, 2, 1, 2s in place in the euro. Coming down to the 60-minute chart, which is what we've actually been trading off. So we caught this move, and we're short again from pretty much near the top in the euro. And if you look at the open trades position on the site, most of the trade positions tables on the site have been a constant challenge to get them to work the way we want. And we're now infilling some of the history, which we've kept manually. But mostly the open trades are correct now. So you can see we're 125 pips in profit on this next trade in the euro, and our stops mean that we cannot lose money on this trade now from our original capital. So I'm looking this week for this to take out this low here at 122.15 and proceed on down to 1.1983 down here. So I've got a 1, 2, 1, 2, and I think we should be in the 3 of 3 down in the euro. And you can see on Friday, this started to accelerate. In fact, the last couple of days, this has started to accelerate down, and we've hit a 2.0 extension on this micro count for the 3, 4, 5. And that's all of that's just for the 3. Then we need another 4, 5, and so on and so forth to take us down. Ultimately, I'm looking for a move down here to 1.1457, and that would just complete the initial wave 1 off the high of this wave 5. So we're 1, and then we wait for the 2 and get short for the fireworks move, the wave 3. But thus far, one step at a time, and still need confirmation with a breakout in the DXY that this 4 is finally in and behind us in the euro. Okay, cable. Again, just going back to 2007, late 2007, I'm working the counts from there. And I think again in cable, we're in this large A, B, C down. And if I come and look at the C wave, at the moment, I've got a 1, 2, 3 into the 1618, an A, B, high C wave. Now, this has come as high as it can come. 618 is the limit in terms of accepting a 4 in an impulse, and it stayed below the low of the wave 1. So the peak we saw this week really does need to be the top of this move in cable, or this count is going to change. I still think we've got lower to come, and I would lean towards a diagonal count. But at the moment, this is holding. If I now come down and look at it on a daily chart, so you can also see that this final diagonal for the C of 4, we came right up and hit this 1618 on the nose, and the 618 bottom down fibs. So it's a high probability target anyway, and we've got the requisite divergences at that peak here in the MACD on a daily time frame. Then 240-minute chart, there's that hit on that 618, and you can see the very, very sharp drop we've seen from there. Next level to take out is this one here at 1.3696. Hourly chart, off the top of the 4, it does look like we're in this more accelerated countdown. So if I just come to the 15-minute chart for a moment, if that's the top of the 4, what I was looking at was a 1, 2, 3, 4, 5 for the 3, 4, 5. And we've just accelerated past all of this. So unless we're getting an extremely extended first wave, I actually think it's much more likely we're in this count where we've got a 1, a shallow 2 back just to the 38.2, and we're going to continue on down this week. So the 3 will be here, 4, 5. Okay. Now, I closed my trade here this week thinking that this was all of the 1, and I have not re-entered a position. So if any of you are short this still and you kept some on, which was the more sensible way to trade, then your stop needs to either be at this peak here, or if you want a really tight stop, bring it down here now. And what you're looking for in this hourly chart is this for to come down here to the 1618, then the 4 to hold the 1.0, and then drop down here to the 2618. So this is the count we're going to be tracking this week. I'm not going to chase this down now. I might day trade it using the levels I put out in the forum from time to time, but I'm going to wait for the 5 to unfold and the 2 back, and we get a full 5 waves of this magnitude and 3 back, then that's a very, very high probability short, and it'll be a long-term swing short play in cable. In the meantime, you know, I bemoan the fact I closed it here this week. I made 220 pips in 48 hours. So, you know, that's better than the kick in the teeth, so to speak. Okay. US dollar, Japanese yen. I've got this in, again, coming all the way back to 1998. I think we've got an A at cycle degree down into the October 2011 low, a B back into the peak seen here in May 2015. And if you look at the fibs here, these extreme fibs on the extreme right of the chart are the retracement fibs of this A wave off the top. And that B wave hit the 764 retrace fib to the penny. And I think we're now in this very large move to the downside in the C wave in the Japanese yen. Now bear in mind, this is multi-year weekly time frame. So within that, I think we have an A wave down here, an A, B, and we need a push up. And it's a, you know, it's a very tradable, substantial push up for a C to complete this B wave before we come down again here to complete a bigger A wave of this. So currencies do tend to move in large ABC patterns. So this is what I've got for on the weekly time frame. Now coming down to the daily time frame, there's the B, A, 5 waves up here for an A, B, C back here. And I'm starting to track the first 5 wave move up off this low looking for a move to between 118.85 and with a possibility we go all the way to 122.42 in the US dollar Japanese yen. 4 hour time frame, there's the countdown for that B wave here, and you can see we've got quite a strong move to the upside taking place here. And if I just then bring that down to an hourly time frame off the B, A, B, C for an initial 1 in a diagonal, 2 back. I think we've got an A, B, we just need to push on up here to either the 1.0 or we can push on up further to the 123.6. So I'm looking up to 108.05 to 108.63 next in the Japanese yen. Then a 4, then a 5. See, all of that and a 3-wave pullback gets us into a long-term swing long position in the US dollar Japanese yen pair. And again, I've been flagging this for some weeks. The signal came off early, but was valid for the weekly buy signal and daily buy signals on the Hurst cycle indicators, indicating that we were the next move of a swing nature in this pair was going to be a long-term move to the upside. By long-term, I mean, you know, several months of upside. So that's what I'm looking for in this pair. And now coming over and looking at the Australian dollar. So Australian dollar up off the March 2001 high. Got an A, B, C for a cycle degree wave 1, A, B, C for the 2 back. Then an A, B, and I'm looking for this move up here, very large move in the C of this 3. This B wave, again, if you take the whole of the length of the A as measured off this low here, the retrace fibs for that, the 786 was what we hit for this B wave. But now we're in this extraordinarily messy diagonal pattern up off the B wave, the initial wave 1. So I've got an A, B, C for the 1, A, B, C for the 2, A, B, C for the 3, A, B, C for the 4. Then an A, and I thought this B wave was done. It may still be, but it's looking like we're going to get another low here. So we come down to the 240-minute time frame. There's the 4, 5 up here for the A wave, A back, B, and I think we're in a diagonal down, and we're going to come down to this 886 fib, 1, 2, 3 into the 1.0, 4. I think this very, very strong impulsive looking move that we saw down late this week is the A wave, and it's near completion. Then we get a B back and a C down. So just coming over to the hourly time frame, what I was tracking was the B in here and a 1, 2, 3. First warning came here. This could have been a 5 that truncated short of any fib, but that's unusual in currencies. And then this what is clearly an impulse move down. And I'm struggling to count the subwaves in this. It's been just a vertical move. So I'm looking for the retrace and to see what it does. But I think this is an A, and I think it's got lower to come. And then we get a B back and a C down. So B, C. I'm looking for 75, 72 to hold this 886 fib. If that doesn't hold and we take out this low, then something else entirely is going on in this pair and we need to rethink. But at the moment, the trade that I was looking for, which was this, I was looking for a 5 up and a pullback. That trade is not one I'm looking for at the moment. I need more price action and confirmation, but I think we're going to make this lower low in this pair. So again, more patience required in this pair to get the swing position. And finally, in the currencies, Bitcoin. So long-term weekly chart off the all-time low back in August 2010, 5 up to here for primary 1, 2. And I think we're still in primary 3. And then 1, 2, 3, 4 at intermediate degree, and therefore we're in this final 5th. We've got a 1, 2, 3, and I don't think this 4's in here. I think it's got quite a lot lower to come, down to 24.73. So if I come down and look at that in the daily time frame, there's the top of the 3. I think we've got an A down, A, B, C. I think we're in this B wave here. And then we drop down to this 138.2 extension at 24.74. 240-minute time frame. There's the 3. This A wave down, which I'm counting as a diagonal, absolutely fibs to perfection right into the 1764 retrace. A up, B back, and I think we're in this C wave up here, and then this is how I'm tracking it, looking for 12,552, and then the bigger drop down in Bitcoin. Okay, quick look at the sectors before we go, and again they're now up to date on the site. So XLK weekly chart, I still think we need lower in this 4. And obviously the pattern is almost identical to that in the NASDAQ. But if I just bring it down to a daily for you, there's the top of the 3. I think we've got an A, B, A, B, C. So I'm looking for a move down to 59.86 to 60 level in the XLK to complete this 4 before going long. The pattern is almost absolutely identical to the NDX. So all of the comments I made on the NDX are completely applicable to this index. But you can see we've made quite a sharp move down today, the last couple of days. There are a lot of companies reporting in this sector this coming week. So I think we've probably got another little high to go and then down for this C wave. XLF, so weekly chart, I think that was the top of the final 3, 4, 5. This is not a sector I like. The sector I'm keeping away from, generally speaking. I was looking for a position in American Express, AXP. The credit card companies operate slightly, will behave slightly differently to the banks. It's the banks that worry me. I may have missed the ideal entry opportunity in that we didn't get down to the lows I was looking for. There is a pattern still to do so, but it looks to me like after its results, it's going to break out, and therefore we need to look for a different set of entry criteria in that stock. But beyond that, I'm not going to be trading XLF. We will need it to get the higher highs in the indices, generally speaking. But I think when we get to the top, it's this sector that's highly likely to be the catalyst for us coming down again. Now, daily chart, again, A, B, 1, 2, 3, very messy 4, and I think we still need to drop down here to at least 26.30 and possibly a little lower in XLF before a final push up here. XLE, now this is interesting. If this 2 is in, then this is going to be unfolding as a diagonal because we've got an A, B, C. There's no other way of counting that move up into the January high. And we've got a very, very deep move down. So we're either getting an A, B, C for a 1, and then we'll get a deep 2, and again everything will subdivide in 3s and make this move up here very, very difficult indeed. But for now, what we need to watch is, if this is the 2, then this is an A, deep B, and we can look up towards the 82 to 86 level next. However, we are now at the 764 retrace of this move down. So the alternative is this is an A down, this is a B back, and that this 2 is not in. And going to the weekly chart, we're going to come down here to at least 59 and more likely 56 for the alt 2. And I have to give the benefit of the doubt to the more bearish count because of this here. This does not look like a 1, 2 setup. This looks like an A, B, and that would mean we've got a 1, 2, 3, 4, another push up over the next week or so. But watch 74.85 to 75.17. If you're long this sector, which I know a number of you are, please tighten up. Or the alternative, you can come out, take your profits. You've had a very quick, decent run up, and wait for this to break out. In any event, this would be the 3. We get a 4, 5, and you're going to get a deep pullback again at the very least. So I think certainly take some off and certainly have very tight stops. Consider banking profits in this sector and then waiting for a better setup, probably from lower levels than where we are now. Okay, XLY, Pretty simple with XLY. I think 3, A, B, and we need to come down another step in the C. So there it is on a daily time frame. Ideal target here, 94.30 to 95.30. And this is a sector ETF I am interested in. I'll probably use this ETF to go long the sector rather than buying individual stocks. Biggest component of this sector is Amazon, and I'm not keen on buying Amazon stock at the levels it's at now, and I'm not convinced it's got that much higher to go before the next correction in Amazon, possibly as high as 1850, but I can't see much beyond that in Amazon in the short term. Okay, XLI, again, 3 here, A, B, same pattern as the Dow Jones, which shouldn't be any surprise to you. 1, 2, 3, I think we'd touch higher in this 4, then down, looking for around the 69.5 level, possibly as low as 68.5, somewhere around there. And again, XLY, XLI, and XLK are the 3 I am interested in for the next move up. So those are the 3 sectors I'm looking to drive the next move up. XLV Healthcare, I think it needs to come down here, 77.60, and then we've got a final push up ahead of us. There are stocks in this sector that are starting to break out, so I wouldn't play the ETF personally. I would look for 1 or 2 individual stock plays if you're interested in this sector, but do be aware we are at lofty levels after a huge run up here. And I think this is a diagonal. I think 1, 2, 3, the 4 should come down, hit to around 74.5, and then up we go. Now, interesting, XLP, so consumer staples, has been the laggard this week that has brought the market, or been contributed certainly to the fall in markets this week. 49.70 is the area that we need to see hold, and certainly if this trades below 47.5, then we may well have seen the top in XLP, and the next move up just be a retrace. I think it's unlikely, but off the 3, I've got an A, B, 1, 2, 3, 4, and this looks impulsive down for the 5 here to me. So looking lower still in XLP, down into the 48.59 to 49.90 region, and then it should go up. But again, it's not one I'm particularly interested in being involved with for the next leg up. But there it is, and 61.96 would be the target for that. Then I did want to come across and just go through a couple of stocks here. So this is the long-term weekly chart here of Google. And I think this 4 is in. We're long Google, bought Google just under the $1,000 level, and you can see why we came down and we spiked under the 38.2 retrace, but we came down and actually hit our target right on the nose, this 1.0 extension. Didn't quite manage to get in that low, but stops now on this can be moved up to the entry if you've got in below 1,000 in Google. If not, just bring your stop up to 990. And it looks like we're getting the initial 5-wave structure up, and then we get a pullback and off. But don't let it actually lose you any money. You can always come out and go back in again. But I think we've probably seen the lows in Google, so I'm fairly comfortable remaining long Google. I haven't hedged this position at all. The other one I'm long is Tesla. Now, I'm scratching my head a little bit on Tesla here. It came down and got within a hair's breadth of the target. We got a spike reversal, and I took advantage of the next move down and bought it. I'm still long this, I'm hedged, but we've come up here to just about this 1.0 extension. These are these multicolored fibs top down for a possible 1, 2, 3, high 4, and we still come down here to 240 and possibly lower. So although I'm hedged, I'm 17% up in no time. I'm considering coming out, because in any event, if we push higher, 1 level higher, that would give me 5 waves up. It would take out the level of this 1, and then we should get a deep retrace or a pullback before this takes off. So I'm going to think about it for the next 24 hours or so, but it's highly possible that I will sell this stock on Monday and just sit to one side for a while and look for a better setup and just take the early gift, if you like. Facebook was the other one I wanted to look at. Now, Facebook, I gave you the entry on this and I actually sent an email out on it, but I am not long this stock. I'm not a fan of Facebook, if I'm honest. There's the 3 up into the 1618, A, B, C, picture perfect back into our target. So the long entry was down here. Now, you've had a decent move up in this stock. Make sure you're hedged. We're looking for, I think you've got a 1, 2, 3, 4, 5. It needs another 4, 5 at a minimum and possibly more, and then we're going to get a pullback anyway. So again, just caution warranted if you've taken it. I am tracking it on the positions table on the site. I did walk you through the hedges that I suggested the other week, and those are still valid. In fact, more so now because we're higher, so you'd be able to buy them cheaper. If I would come out, if I were in it, then I will flag that by reflecting it in the positions table on the site charts. Okay, so, and the other one is SID that we're in. And weekly chart, obviously we're looking for this to take off up here ultimately, but just coming down to the daily, there's the 1, 2, another clear 5 up for the 1, A, B, C. Now we got in here at the 618 retrace with the caveat that it could still come one step lower. Well, it did just that down to the 786. That's held, and then we've got a couple of sort of very sharp up days in this stock. Either we've got an A, B, C, and we're going to come down again, which is not what I want to see, and that would have me on notice to potentially jump out of this thing, or we're getting a 1, 2, 3. This is a 4 we've seen, and we push on up here to at least 288. That would give us a completed diagonal up. If we see that and a pullback that holds a fib, and someone, I think it was Jimmy, said in the room this week he wanted to add to it. I wouldn't add if we pull back without making another high. If we make another high, then pull back, then by all means add to the position. For now, no change in positioning, still a full allocation along this stock, and all the stops and what have you are on the site. Okay, that's it from me for this weekend. I will be back on Monday morning in the forum and in the live room as usual on Monday afternoon.